If you are new here, a subscribe would be really appreciated. Don't forget to smash that like button and also let me know down in the comments below what pair you would like for me to analyze next. Now today we're going to take a look at GBPAUD from a technical, order flow, fundamental and sentiment perspective. And I'll give you all the reasons for why you should be looking for a nice opportunity on here. Now the first thing that we can see over here is we can see how from a monthly perspective how the market is testing a very strong structural area. Now this was acting as a level of resistance. It got broken, it became support. The market then broke above that, then came back to retest that level again as a level of resistance. We also had this massive impulse, and after an impulse we got the correction, so the next impulse is very likely to be expected. Now dropping down here on the weekly time frame, what we can see is we can see from a weekly perspective how the market had broken and closed below this level of support that got broken from the top down, and it's now testing it as resistance. So that gives us further confluence for the market to continue lower. And you can see how aggressive this bearish candle was over here to the downside. Now dropping down here on the daily time frame, well, now what do we see? Now you can see here from a daily perspective how the market had given us a clear impulse. After an impulse, we got the correction, and the way we measure that correction is simple. You take your Fibonacci from the low to the high, and you can see how the market is currently testing the 0.382, which is the first Fibonacci level in the market. In doing so, the market also now printed this head and shoulders pattern after rejecting the 38.2, because we've got a left shoulder, we've got a head, we've got a right shoulder, and the market is also testing previous daily support that is now turned resistance. Excuse me. Now looking at the order flow data, so what the biggest banks, hedge funds and institutions are doing in the market, we can see here from a from an Australian perspective, we can see how hedge funds started closing 163 of their long positions, and they also closed 1.7k shorts as well. But we can see how they have aggressively added short positions, and you can see how the overall net positions always stood between 70 to 80k over there. Looking at the GBP, we can see how hedge funds started closing their long positions, and they also started closing their short positions there as well. Now I can see that there was a slight change base of the last report, because we went from a 38k to 38.8k to 38.277k. So that is not 100% confirmation, because there's many things that we do look at. Now having a look at the sentiment data, we can see over here how 46% of the retail traders are short and 54% of retail traders are long. And trust me, you always want to be on the opposite side of what this report is saying. So if you have higher retail traders being long, you most likely want to look for sorting opportunities. Now when we come back over here, from a technical perspective, firstly let's look at um, the fundamental data. So we can see here this article came from The Guardian. The article reads that market thinks Omicron Plan B will delay rise in UK interest rates. Fears of economic slowdown mean Bank of England less likely to intervene to dampen inflation. So we know that the interest rates decision for the GBP is coming up on the 16th of September, which is in 2 days, and because of the Omicron that is literally, because of the cases that was identified there as well, we obviously don't expect the bank to raise interest rates there as well, because they obviously want to make sure that they keep interest rates low, make it affordable for people to go and borrow, just to keep the economy a bit stronger there as well. So we also know that it will be very difficult overall for them to just hike the interest rates. Now when interest rates does not increase, it just makes it difficult for investors to put their money in there, because if you want a higher return, you always want to put your money where the interest rates are higher, because you would obviously want a higher return back. So this move over here is highly likely to happen during the course of this week. Now the best way to approach the situation from a daily perspective is you always want to wait for some proper confirmation over here. Now the best way I'm going to approach the situation over here is I'm going to wait for the market to provide me some sort of a confirmation, because looking at the daily we can see we still quite bullish. So I'm going to wait for the market to provide me some sort of bearish confirmation before I will take an opportunity on this trade as well, for the market to not only complete this impulse correction and impulse pattern, but also for the market to react to this head and shoulders pattern that we have here, the interest rates decision, the sentiment data, as well as the order flow data as well. Now, I hope you guys enjoyed this video. Thank you so much for your time, and have a beautiful day further. Thank you so much. Cheers for yes.